The important news flashing on your screen, the July IIP data is out. It has come in at 3.5%, and this is in comparison with 1.5% which was there in the month of June. Although if you compare with last year, of course, the number looks down compared to 5%, but if you take a month-on-month comparison, it is coming at 3.5% versus 1.5% in June and 1.9% that happened in May. To discuss IIP numbers, I have with me Kanika Pasricha as well as Aditi Nayar. Aditi and Kanika, welcome. First, I want to come to you, Aditi. 3.5%, what is your first reaction?
Thank you. Well, it's certainly higher than what we had forecast. We were expecting the IIP growth to go up slightly to about 2%, so 3.5% certainly looks a lot better than that, even though overall it's still a fairly tepid number. And looks like manufacturing has done quite well. Within manufacturing, infrastructure, construction goods, and consumer durables have both done quite well in this month, which is broadly along the lines we were expecting. And I think as we move out of the monsoon season, we should start to see less of dampening coming in from mining and electricity, which have been posting very low growths. But manufacturing, of course, between the tariffs and the GST related changes which are on the anvil, could see some amount of volatility.
Right, just for the benefit of viewers, mining sector output is at minus 7.2%, and as Aditi was mentioning about manufacturing sector, that has come in at 5.4%. Electricity sector output growth is at 0.6%. Kanika, what is your first reaction, especially on manufacturing sector output at 5.4%?
So, Ankur, first of all, thanks for having me. And as Aditi also mentioned, manufacturing is one segment which gave us also a positive surprise. We had thought that they may be, so first, headline, our estimate was 2.3, number is coming at 3.5. Mining electricity stay in contraction zone because rains were earlier than expected this year. So on a YOY basis, the numbers are falling. And of course, it's disrupted production, demand for electricity as well, and mining production. But coming to manufacturing, it's been a pickup in growth this time round, which is a positive from around 3.9% last month to 5.5%. That is a positive, and what it's really aligned well with is consumption goods IIP has picked up. So consumer non-durables, which is a beacon of rural demand, from negative territory, it's back into positive zone at around 0.4, 0.5%. And consumer non-durables has picked up from close to 2.9% last time to around 7% handling. So demand levels showing some recovery. And that is also signaled by manufacturing. Though within manufacturing, the last point to make would be, we would want to get into subsectors and understand that the tariff hit sectors like textiles, even if not directly affected, but still there is some uncertainty on pharma, on computer and electric equipment. So basically the smartphones which are included, how are they performing, as these segments likely stayed under pressure even in the month of July? Thanks.
Right. Before we come into tariff discussion, because that is the way forward, how the economy will get impacted, and especially our IIP growth. But capital goods output growth at 5%, Aditi, do you again see this as a positive sign?
If you look at the other indicators of capital expenditure, particularly on the government side, it's been quite positive so far. We've had high growth in capital expenditure on a low base because of the elections last year. And that is something that has continued up to the month of July. So the capital goods data is broadly in line with that. Now, the interesting thing is going to be after August, because that's when CapEx really picked up last year. It was very back-ended last year. So in the remaining months of this year, we are expecting the capex growth from the center and the states to be much, much lower than the high double-digit growth that we've seen in April to July. So how do the capital goods indices behave after that? So my suspicion is that with a likely slowdown in government capital expenditure growth, because the headroom that's left in the budget estimates is now lower, and also with the fact that the tariff related uncertainty is likely to delay the private capex. possibly the best of the capital goods growth may be behind us.
Thanks, Kanika. Anjali here. Thanks, Aditi. Kanika, this is Anjali. I just wanted to know from you what is the impact that you're seeing of the US tariffs on IIP as well as overall GDP growth?
So, Anjali, first and foremost, the IIP numbers, despite the kind of even with or without tariffs, have been persisting in single digits for a very long time. So first, I would say the utility of the metric itself needs to be looked at, and of course, while they have tried to review the index, once they look at a renewed base year, they will look at different kind of components. Maybe we'll see something more coming up in IIP, but most important, from an overall growth perspective, our exports to US is $90 billion. After adjusting for exempt exports, primarily smartphones and pharma, apart from others, and adjusting for value added as well, the number which is affected part of GDP turns out to be around 1% of GDP. So this is via the direct line of impact in terms of exports to the US affected. Now, coming to the next point that Aditi made, very important, is the sentiment channel which works because large corporates or even MSMEs, they're deferring their capex plans because of tariff related uncertainty. So, overall impact can be anywhere between 50 bips to 1%. I would say even higher bias. The only exception this year is given that Trump had given a 3-month window for reciprocal tariff hikes to be levied, this year everything is front loaded. So we see exports front loaded even in the month of July, for which the IIP numbers come out. Exports growth was around 7.5%, which is a positive number. Then we have seen this year, because of elections last year, the base is positive, and as Aditi explained, government capex is more equally distributed or equally aligned. So government capex growth is also very strong. So first quarter GDP growth, which is expected tomorrow, is likely to be around, our estimate is 7. There are people in the market around 6.6, 6.7. So it's likely to be a strong number. So when growth is front loaded, even if the impact of tariff hike can be as high as 1% of GDP, the number in terms of hit on GDP growth for FY26 may be around 40 to 50 basis points at the current juncture. So a sub 6% GDP growth is something that we are also looking at this year. But numbers, hard data needs close watch. It's all in anecdotes. Growth fault lines have not yet appeared in data. Thanks.
Right. So sub 6% GDP growth is what Kanika is anticipating. Aditi, I want to come to you with a similar question. How much is your assessment? Is it going to be definitely what Reserve Bank of India has projected 6.5%? Is it going to be lower than that number at least?
So for Q1, we projected GDP growth at 6.7%, which is higher than what the MPC has projected for that quarter. But for the year as a whole, we've actually reduced our growth forecast to 6%, which is below the MPC's forecast. So we're looking at growth tapering off in the later quarters. As both Kanika and I have been saying, there's been a lot of front loading this year in government capex and in exports. And tariff related uncertainty is definitely going to have an impact on exports in the later quarters and in private capex. The GST impact will possibly be uneven across quarters. We might see some deferment of discretionary purchases in this quarter, in the second half of the quarter that is currently underway, and a pickup after that once the rationalization actually happens. So from 6.7% in Q1, we are expecting a tapering off, and right now we're looking at a 6% growth for the full year. But of course, this is subject to a lot of revision as more and more data comes in.
Right, and some more data has come in as far as IIP is concerned. Infra goods output growth is at 11.9%. That is one of the outliers, and consumer durables output growth at 7.7%. Consumer non-durables, which we discussed earlier, has actually come in at 0.5%, as was pointed out by Kanika earlier. Kanika, I want to understand with you, infra goods output growth at 11.9%. Again, this is much more better than what one would have thought. Last year it was 5.5%.
So, Ankur, this is so first, I would say two to three proxies they are using to estimate these numbers is the government capex for infrastructure. That's one. Second, in fact, while of course that's very strong, the growth there, if I remember correctly, is actually while July fiscal data is still awaited, but the last number for the month of June also was steady at around 25-30% or thereabouts. So the growth is very strong because there's a base effect as well. Even though full year growth for central government capex per se is not more than 10%, just thereabouts. So it's just a base effect because of because of election same period last year, and capex momentum was lagging same time last year. That's one. Second, this is also showing up in steel and cement production indicators in the core sector numbers. So steel production July was 12.8%. Cement production in the month of July was also around 11.5-12%. So that is clearly reflecting this infra IIP number, and it's in line with expectations. I would say a bigger surprise for us was consumer non-durables, which is a proxy for rural demand, shifting from a negative number for last few months to a 0.5%, a positive 0.5% number. It is showing some healing underway in rural demand, even though lead indicators they're also mixed, like two-wheeler sales in the month of July were in deflation mode, were actually negative, were in contraction mode. But tractor sales were very strong at around 11% and higher. Rural wages have seen a recovery. They're in 7% handle, so we get data with a lag. So rural demand indicators are mixed, but the IIP number for consumer non-durables is showing some healing, which is a positive on the backdrop of a surplus monsoon. Thanks.
Thanks, Kanika and Aditi, for joining us at this hour and helping us decode the IIP numbers that have come in. Thanks once again.